Hi, and a very good morning to those who are watching through StreamYard and also through our YouTube and Facebook channel. So good morning to you. Bear with me a moment because now I'm going to join our followers on Instagram. So bear with me a moment while we go live there. And a very good morning for those who are following us on our Instagram account as well. And well, we are live on Saturday, the 4th of April, and welcome to Solving the UK Landlord Crisis webinar. Well, I know for me, I'm certainly interested in this myself, but let me introduce myself. It's the first time you've attended one of our presentations. My name is Simone and I'm the head of the Advocate Network Department. Now, we've got lots of information that's going to be shared today, especially if you are a landlord or you know someone who is a landlord. Get a pen and get a paper. Great information is going to be shared as well. Now, just to remind you, although we are live, this will be recorded and uploaded onto our education platform, along with handouts that will complement today's presentation as well. Now, thank you for submitting your questions. I have gone through them, and I think a lot of your questions will be answered throughout the presentation. However, if you have any additional questions, don't worry, because they will be answered. How? Well, after today's presentation, I will be sending out an email to all our attendees with a link. All you need to do is click on that link, submit the additional questions that you have, and they will be answered a few days later by our speaker and Andy Benson, who heads up the Ross Media platform. So fear not, all that information, all your questions will be answered. There will be some additional links that we'll be sharing as well. So keep an eye on that slide, which are very useful and important to you. But as I said, have you got your pen and paper ready? Let me introduce you to our speaker. He is the founder and the president of the Republic of Old Souls. It's Ian Clifford. Ian, good day. How are you doing?
Yeah, I'm doing really well. I'm super busy and lots of exciting things going on. So if you want to know what's been going on in the last few days, have a look at our various Telegram channels. There's some interesting stuff going on and lots of news and lots of information there. If you are enrolled as an envoy, you know, there's lots of good stuff there, and there's lots of good stuff there if you're not. So we are using Telegram more and more. I'm posting little videos quite regularly through the week, which people have said is good because they like to hear from me. So I'm responding to demand. Let's put it that way. And I think the more information we've got available, the better. And I've got a big announcement to make, which I've just put on the Telegram channel for our enrolled members. I think I also put it on the Winning at Monopoly Telegram channel as well, which I think is a massive game changer to do with the digital Ian, the Ian avatar. So we've been working at creating an avatar of me, basically, so that all of the knowledge that I've got, all of the knowledge that I use to create these solutions, all of the knowledge that I've amassed over 40 odd years, and all the research papers I've written on every subject that is, that is connected to these webinars, the problem, the solution, how do I come up with all that, the deep research that I do, all of that stuff is all loaded into an AI avatar. And so if you want to know anything, what would I do in a situation? How would I address this problem? What's going on with the protocols, with the freedom plan, with the process that you might be in, not your individual process, but generically what's going on, then the avatar will have all of that information in it. Every webinar I've ever presented, every Q&A I've ever answered the questions on, it will have everything in there. So this is going to be a game changer. Just imagine that you could have you could have a Q&A with me directly. Obviously, I can't do that with thousands of members, but the avatar can, and it can be available 24/7, no matter whether you're in Australia, Canada, United States, United Kingdom, doesn't matter where you are, you can access that avatar any time of the day or night if you want to ask it a question, if you want it to do a whole presentation on something that I've been outlining, or anything that you're curious about. It will have all that information in it. Not only will it have information in it from the past, but it will also be updated every week with everything new that I create. So I think it's a massive game changer. I hope you like the idea of it. I think it will be well supported, and it's the best I can do to enable you to have access to what I know about how to solve these problems without actually you and I all getting together, which would be impossible with members all over the world. So many members, so many different places. It would be impossible for me to do that. So I hope you like that. I'm going to carry on with our webinars, obviously, because a lot of people like the live webinar. I will be doing webinars for different countries, focusing on different problems that are being experienced in different countries. I will be making those available on a Saturday at this time, 10 a.m. It seems a popular time, and they will be made available for different problems, different solutions, and then all that knowledge loaded up into the avatar. And then if you are on that webinar or any of the webinars, you'll be able to immediately get into the avatar and have a presentation on how everything works. And then you'll be able to proceed if you want to proceed, or if you just want to ask questions. It's entirely up to you. The avatar will be freely available, and I hope, as I said just now, I hope you like it. But let's turn to this webinar, because I want to tell you a little story here about a little bit like David Icke's been talking about the global control, the worldwide control agenda for 35 years, warning people about all of these freedoms being eroded away. And at the beginning of David Icke's journey, everyone thought he was a nutter. Not everyone, but the majority thought he was a nutter. And they didn't want to listen to him, and he was laughed at in the street. He was laughed at everywhere. But now, if you actually look at the things that he predicted were going to happen many, many years ago, because he knew what the agenda was, and now look at what's actually happening with the control agenda. David Icke was pretty on the money, actually. There's only a few things that haven't actually come to pass yet. So I'm not suggesting that you become a David Icke supporter, but his predictions are based on the fact that he already knew what the roadmap was, and he openly admits that. He knew what they were planning to do. What the cabal were planning to do is all out there in research papers that people don't read, because most people don't know where to find them. Even if they did find them, they probably wouldn't want to read them because they're buried in technical papers in various places where most people wouldn't look. And even if they did look, they probably wouldn't comprehend what's going on with the agenda, because although it's all out there, it's not that easy to find it. Now, if you turn to property, and in and around 2001, I got a joint venture with Halifax Bank of Scotland. My firm, Integrity, which was the name of my wealth management firm that became a product manufacturer and serviced the wealth management market with a whole range of financial planning products. They were all made possible because I got a joint venture with Halifax Bank of Scotland. In fact, it was Bank of Scotland in 2001. And because of my ability to solve complex problems, the Bank of Scotland and I got together. I got also with Saga, which is a big company in the UK. You may or may not have heard of them. They're one of the biggest retirement companies in the UK. And I got together with Prudential Insurance Company, and all of those were brought together by me because I had designed a solution for the release of income from property without risking the property. So I knew a lot about how the banks worked, how the credit lines worked, how the property market works, how to shelter things, how to create a riskless or virtually riskless solution that created an income stream from property without the homeowner risking at all the property. They had the ability to sell the property. They had the ability to live in it, obviously, for as long as they wanted to. They could leave it to their heirs, all those good things. I solved that problem in 2001, and I actually got an offer of unlimited funding for it from the Bank of Scotland. And what happened was a long story. I'll cut it very short. They changed their mind. They gave me an unlimited credit line for other programs and products that I then designed, which were called the Maximizer range. It's all in my documentary. It's all in my backstory. And so, because of all these things, I looked into the property market in great detail. And I was very aware of potential risks that may unfold many years later. If you wind the clock forward about 10 more years, there was then all sorts of seminars. It was back in those days of people promoting property as an investment. Lots of companies out there, lots of promotions. Credit was quite easy to come by. Mortgages were fairly easy to come by. Landlords could set up. They didn't have to have a fortune to get their property portfolio built. They could create a portfolio. Some of the landlords created very substantially large portfolios. I mean, we had some interactions with landlords with over 100 properties, maybe 200 properties in portfolios. And it all sprung into existence because of three things. People wanted a passive income. Totally understand that, get that. People wanted something which they could set up that was like a passive income, so they could create these property portfolios. The components of it were reasonably easy to put together. Nothing's easy, but it wasn't very difficult to build a property portfolio. And then you would be able to appoint people to look after the properties, appoint people to collect the rent, appoint people to look after all the agreements and all that stuff. And if it all went in a perfect sort of scenario, you could sit back as a landlord with a passive income stream. And not only that, property, of course, the British mindset on property is that it always goes up in value, which historically has been true. Not only could you make a passive income, but you could also make a massive capital gain. When you got to retirement age, you'd either keep the portfolio giving you a passive income, that was your pension, that was your retirement, or you could sell all the property and end up with a large lump sum, which you could then invest and put into things that would generate an income. So the proposition was very, very attractive. And there was nothing about it that you could really point to and say, well, that's going to be a disaster. People should be very wary about getting involved in property investment, because everything about it looked really, really attractive, and all the components of it made perfect sense, apart from one thing. And that one thing is tax. And I looked at it in about 2011, and I was going to build a very large portfolio and put it into an investment fund, actually a collective investment that bought property as its purpose and rented them out, and then was going to offer shares in a property investment portfolio. Today they're called REITs, R-E-I-T-S. Back in 2011, REITs weren't available. I was going to do that, and I still had the ability to get credit from banks. I could buy the properties in the fund. I would manage the fund. We'd get tenants in, and I was going to offer that out as an investment proposition where people could buy shares in that investment company. And I had at the time a lot of connections in the property market, and I also still had connections in the banks, and I had connections in all the areas that I needed to launch that program. And the reason I didn't do it, was because of tax. I started looking at the tax risk of property investment, and I didn't like what I saw, because most landlords were buying property in the name of the body corporate, the birth certificate entity. Most landlords were building these big portfolios because it was easy to get the mortgages. You go to get the mortgage, buy to let. The mortgage provider would say, okay, who are you? You'd give them your credentials. They'd say, how many properties have you already got? You said, I've got 5, 10, 20, 50, whatever it was. They would look at you and say, well, can you manage those properties? And you say, well, I'm already doing it. So you tick all the boxes, and the mortgage provider would provide the mortgage. As long as you could put a little bit of money down, you'd get the mortgages. And they were pretty easy to come by. In fact, there were lots of promotions of these types of mortgages at the time. So everything was reasonably, I'm not saying anything is easy, but it was reasonably easy to build property portfolios. And many people did, and many people thought it was a really smart thing to do. And I'm not criticizing their decisions, because they didn't know what I knew at the time. They weren't looking at the risk of taxes. I did. That's why I didn't do property investment in that way. I had property, but I bought property in a completely different way. I didn't use a landlord type model to buy property. I didn't do the buy to let model in the way that other people did. I had access to capital. I bought property in a different way, and all of that, I sold all of that. Story for a different day. But because of the FSA attack on me in around 2013, 14, I had to sell all the properties. But that's a story for a different day. Now let's get on to today's webinar. So I think the message I'm trying to put across is that you can't trust the cabal. And a lot of people have great difficulty in accepting that the cabal, which includes the government, cannot be trusted, because they don't want you to prosper. And it's a really, really difficult thing to realize. And many people will take years to realize that the governments are not here to help us. The governments and the cabal want to control us. So what they do is they set traps. The property market is a trap. The buy-to-let market, the landlord market is a trap. They get you into it, it looks great, and then they trap you in there, and then they can control how you behave, because you've walked into a trap. You're in the spider's web, and you don't know the spider's there, and then eventually the spider's going to come out and get you. And that's basically what is happening with the UK landlords. And it's going to happen around the world, by the way, because this isn't just about the United Kingdom problem. There will be problems in every single country to do with portfolios of property, because that is centrally the cabal's plan. They've already trapped millions of people around the world who bought property portfolios and created them. Then now they're going to execute on their plan, which is to destroy the model, so that you become desperate for a solution which isn't really there from any conventional source, and you end up in a very, very bad place. And that means that they were able to control the outcome and control you. So I could see that years ago. I didn't trust the government. I didn't trust the tax offices. I still don't trust the government. I do definitely not trust any tax legislation. I definitely don't trust the cabal. If you know what their agenda is, you wouldn't trust them either. Many of you on this webinar probably already know what the agenda is, and it's rolling out. And the landlord problem is just one example of how they have trapped lots of people, and now they're exercising their plan, which they planned many years ago, by the way. This hasn't just come about. This was baked in the cake many, many years ago. Now we're seeing the consequences of it. But here's the good news. The good news is that someone like me, who's got a lot of knowledge and who's got the ability to put my knowledge into action and can put structures together and solve complex problems, you've got access to someone like me, and you will have access to the avatar soon. And this is why they try and put me in jail, by the way, because I keep coming up with solutions that solve their dastardly plans. And I've been doing it for many, many years. 25 years I've been doing things like this. and they really don't like it. Which, if you're wondering why they keep chasing me about and trying to put me in jail, it's because of this. It's because I have the ability to come up with solutions to complex problems. They set the traps, they cause the problems, I come up with the solutions. It's like a cat and mouse game, isn't it? Yeah, it's like Tom and Jerry racing about. They're always chasing around, and I'm always coming up with new ways to evade their attacks. They can't deal with it. They hate it. I'm going to carry on doing it. And today I'm going to show you how you, if you're a landlord, can solve one of the biggest problems that's out there in the UK property market right now. Let's move it on. Well, you know, as I said just now, it's all about taxes. Section 24 of the Finance Act of 2015. I'm sure every landlord out there will be aware of what Section 24 actually means. If they're not aware of it, I'm going to explain it because it's really quite simple, right? In the old days, you could buy property, you could get a mortgage in the name of the birth certificate construct name, that's the citizen name, the person name, and you could set all the interest of the mortgage against the rental revenue. I'm going to call it revenue. You'll see why when we get to a later slide. So you've got revenue coming in and you've got mortgage interest going out. Now, if you understand how taxes normally work, you can set the interest, the expenses off against the revenue. And the difference between the revenue coming in and the expense going out is profit. Yeah, that's pretty easy. It's a fairly easy concept. Every business runs on that basis that they can offset their costs against the revenues that they receive. And the difference between revenue and cost is profit. I think everybody can get their head around that. And that's exactly how the landlord model should have been working. There was another dimension to it, which was the value of the asset could go up, so you could make capital appreciation as well. But if you're just looking at the cash flow aspect of this, if you had 10 properties and they were bringing in £10,000 a month, just to keep the numbers really, really simple, and your mortgage cost was £8,000 per month, then you've got a £2,000 per month differential between the revenue and the interest cost. That 2,000 was what you were paying tax on. That you'd have other expenses as well, of course, but let's just suppose there was 2,000 differential. That is what you would pay tax on in the old model. When Section 24 of the Finance Act 2015 came in, it basically destroyed that model. The model became that you had 10,000 a month of rental revenue and you couldn't offset the mortgage interest. So now you've got to pay tax on 10,000 gross revenue with no ability to set off the interest cost of the mortgages. Now that is a bit of a devastating thing to happen, yeah? Imagine if you've got 100 properties. Imagine if you've got 100,000, 200,000 a month of revenue coming in, and you suddenly can't offset the mortgage interest against that revenue coming in. The tax bill is going to be enormous. And most landlords probably didn't have the cash flow coming in to pay the taxes. So what did they do? They had to try and solve that problem. And what was originally a really good idea and a really good investment proposition that was working for most landlords, it was working fairly well. There were some examples where it didn't work very well for different reasons. I won't go into all those reasons, but the actual model itself seemed to be working pretty well until 2015. And that was the beginning of the cabal's plan to destroy landlords. Next slide. And then you've got basically it's all of these taxes acts came out, Section 24, which was really all about the interest and not being able to set the interest off against the revenue. And a lot of landlords didn't think it was going to happen. I remember it at the time. Oh, the HMRC are talking about this. It's not going to happen. It's not happened yet. They won't do it. It will destroy the market. They want property prices to stay high. If they do this, it will destroy the property market. A lot of landlords were going around with that belief. I didn't have that belief because I knew that this was already a plan that they engineered many years before. So that's basically what was going on. And then you've got, in 2015, you've got hundreds, thousands of landlords that have got a lot of property in their portfolios, and suddenly they're facing this crisis. They didn't think it was going to happen, then it did happen. So then they're looking for the solution. Yeah, who wouldn't look for the solution if you were in that situation? And just to set the scene for this, you can't go and sell all the properties because A, there might not be buyers. Even if there were buyers, it would take you ages to do it. And maybe there would be massive capital gains tax problems if you sold all the properties, because then you'd make all these gains, you'd crystallize the gain on the property, you'd have to pay massive amount of taxes by selling all the properties. So most landlords didn't want to do that. They didn't want to go and sell all their property. They wanted to keep it. They wanted to find a solution to this problem. So what did they do? They went to seek out a solution. Next slide. And what was that solution? Well, innovative tax barristers started launching solutions. Promoters of this tax avoidance this scheme started launching different presentations, inviting landlords to different presentation events, you know, wining and dining them, taking them out, presenting to them in all different ways. Because the landlords had a massive problem, the tax barristers wanted to make money, the promoters wanted something to sell, and so suddenly what you've got is the SIS, which is basically a model which used a transfer of the equitable title of the properties into a trust and the beneficial interest of the properties into a trust. So to understand what that means, the actual properties are in the name of the landlords, the body corporate name, right? So the landlord as a body, the body corporate aspect of the landlord, that's not the living man, woman, that is the body corporate birth certificate construct. The player piece on the monopoly board has now got, let's say, 100 properties in the name of the birth certificate construct, the body corporate. That body corporate birth certificate construct has got 100 mortgages. Yeah, so it is the piece on the monopoly board with all the mortgages and all of the equitable title to the properties. The legal title to the properties is always with the land registry, by the way. So it's only ever the equitable title that the body corporate birth certificate construct actually had the title to. So what the tax barristers did was they came up with a novel way of transferring the equitable title to property and the beneficial interest in the property into a company and also a trust. So there was a company formed and a trust formed. It was all packaged up, and the idea behind it, which, you know, to be fair, did sound very, very, very viable. It did sound very realistic. It did sound like it was going to solve the problem. The idea was that you could then shift all of the revenues that were coming into the company and the trust, it's a company and a trust structure, and all of the mortgage interest could also be shifted in to the company. And because company law, tax law, is different from the law that applies to the body corporate, the birth certificate construct, that player piece on the monopoly board, because tax legislation operates differently for companies, limited companies, than it does for the birth certificate construct. Now the revenue that's coming into the company could be you know, one in a schedule, that's the revenue, and then you've got the mortgage interest on all of the properties, which could be set off against the revenue, leaving the landlord back into the situation they were in when they had all of the properties in the name of the birth certificate construct and all of the mortgage interest in the name of the birth certificate construct, and they could set the mortgage interest costs against the revenues that were coming in. So all they really did was shifted the revenue and the cost into a company, and they put a trust in place, and it looked like it was going to work really, really well. I actually remember looking at this in about 2016 and thought, the HMRC are just going to look through that. They're going to say it's a sham. They're going to say that it's a device. It's a scheme. It's not going to achieve it's not achieving their objective, which is to destroy landlords' portfolios and make the landlords destitute. It doesn't achieve HMRC's plan. So why are they going to turn a blind eye to it? Why are they going to leave it to multiply up and escalate in the way that it has? That's not what HMRC does. Their job is to collect taxes. That's their job. So why would they not do their job? And given the fact that HMRC typically wins nearly every single lawsuit that it goes into, there are a few exceptions, but typically it wins every lawsuit. When you realize that HMRC, the judiciary, are both on the same side, so they want control, they want to take away people's freedoms, obviously, that's very obvious. How could you expect to win realistically if you went up against HMRC in a courtroom that is already sympathetic to HMRC's objectives? It's going to be a very, very difficult battle, yeah? So I looked at it in about 2016 and thought, this doesn't look good to me. I mean, this solution might work for a while, but it probably won't work in the long term, because HMRC is also at around the same time going after all of the tax avoidance schemes. I did a webinar a few weeks ago on the tax avoidance, and they had this agenda. They had this in their, all these tax avoidance schemes were in their sights in and around 2016 when this tax avoidance scheme was being dreamed up by barristers. So if you were a landlord, I absolutely understand and comprehend why you might have gone into one of these schemes. It was at the time the best option available at that time, and many, many landlords went into it, and it has worked for a while until now. Next slide. So there you go. It was a combination of a company and trust. It was like a hybrid between a company and a trust. And the promoters of this scheme and the tax barristers who put it together, they wrote papers that would look very convincing. The promoters were very confident that this was going to work. The landlords wanted it to work. So you can imagine how popular it became. When the market wants it, the barristers seem very convincing. The promoters are very good at promoting. You've got all of the components of it catching on, and it did catch on, and it caught on in a very big way. But when you get into the technical side of it, it was fundamentally flawed from the beginning. And most people never looked at the technical side. They didn't deeply look into the technical side of it. They just wanted it to work because they needed it to work. And they didn't really challenge it. And they didn't really have any other alternatives at the time. So they did it. Next slide. And here you go. You see HMRC. These aren't my words, by the way. This is what HMRC says about tax avoidance. They call them shams. They say they have no substance. They say that they are basically a sham or a scheme that's been devised to avoid paying taxes, which of course is their number one objective. Everybody in HMRC wakes up every morning. Their job is to collect taxes. So that's what they try and do, yeah? So if you've got HMRC calling a structure a sham and saying that it does not enable the interest of the mortgages to be offset against the revenue, and it doesn't, it fails on what they call Section 162 relief. That is the interest relief. That's the interest being set off against the mortgage cost. If they say it fails that Section 162 relief, you've got a hell of a job to convince any court that the HMRC are wrong, because HMRC come up with Section 162. They know what it is because they brought it into legislation. So to go to a court and say that to HMRC in a courtroom, you're wrong, Section 162 doesn't work like that, is a bit ridiculous, yeah? Because they devised it, and they devised it deliberately so that it would make it nearly impossible, probably impossible, for landlords to win in a courtroom. So if Section 162 relief, which is interest relief against the revenue, doesn't work from the eyes of HMRC, now you're really into a really big problem, because you can't find any legislation anywhere that you could counter the Section 162 relief argument that HMRC are going to put forward. It's going to be really difficult to win that. Next slide. Well, you know, a lot of people think that HMRC don't actually know what's going on. I had a conversation recently with somebody who'd invested in cryptocurrency, and they said to me, well, you know, I'm okay because HMRC don't know about my cryptocurrency investments. They don't know about all these coins and different things that I've purchased, because I've got them in sort of secret wallets and I've got them in secret locations that they don't know about. And I said, do you really believe that? You really believe that HMRC or any tax office or any government or any of the cabal don't actually know what's going on? Don't actually know what everyone's got and where they've got it? Do you actually believe that you can put things somewhere, like digital things like cryptocurrency? You can put property, and the property's digital because you've got the titles, which are all digital. They're all digitally recorded, the land registries. Does anybody actually believe that you can hide things in this surveillance world that we live in? And the guy I was talking to said, yeah, but I've got my cryptocurrency in a wallet and they don't know where it is. So therefore I can hide it. And I said, well, how did you get the cryptocurrency in that wallet? Oh, well, I had to take it off an exchange and then put it into the wallet. And I said, so you took it off the exchange, and they knew you took it off the exchange because they track everything on the exchange. So if you own a property portfolio and all of the property is owned by the cabal because the legal title is registered to them on the land registry, and then you think that they don't know that there are properties there registered to the name of the birth certificate construct, the equitable title is in the birth certificate construct's name, and the legal title is in the cabal's name, because that's the whole reason why they got the properties registered on the land registry in the first place. So if anybody out there thinks you can hide from HMRC and they don't know that you've got a portfolio of property, and they don't know that all the mortgages that you used are linked to the birth certificate construct, then you really need to wake up. You need to get a bucket of water and pour it over your head and wake you up, because everything is tracked and traced. That is one of the big reasons why things are registered. It's one of the big reasons why there are these regulatory platforms that everything is being traded through. Everything is registered. Everything is tracked and traced. So if you look at what HMRC do to try and find the landlords, is they do this thing called discovery. Now it's a bit of a ridiculous term because they already know what everyone's got, but they call it the discovery assessment, just to disguise it a bit, just to make it look like they don't already know what's going on with everyone's property, with everyone's bank accounts, with everyone's cryptocurrency, with everyone's investments. The only thing they probably don't know about is physical assets that you might have stored in your safe and you put them there without anybody knowing. That's about the only thing that they couldn't know about. But that isn't the majority of the people out there. So what HMRC is doing now, and they always use a legislation to do it, because of course the birth certificate construct, again, is registered to the cabal, yeah? So the birth certificate construct, the birth certificate registration is registered to the cabal. It's registered to the government, registered to the crown. So they own it. They control it. All the property, the equitable title of all the properties in the name of the birth certificate construct, they already know everything, and it's all registered to them, which is something which a lot of people don't want to face up to. This is just a game. It's just a game of Monopoly with artificial things on the Monopoly board. But under Section 29 of the Taxes Management Act 1970, so you can tell how long they've been planning this trap, they can have a look at anything they want, basically, and they can go back in time. So they already know what's been going on, and now they can go back and they can open tax assessments for the past. So if people out there are thinking, well, it doesn't really affect me at the moment because I haven't found me, then you need to wake up. You need to go and get a bucket of cold water and pour it on your head and wake up, because they already know everything. I'm telling you, I've been through a tax investigation. It went on for 3 years when I had loads of revenues coming in. They already knew everything. And that was years ago that happened. Today, they know even more than they did years ago. So they can retrospectively look back at everything that's been going on in the property portfolio and in the name of the birth certificate construct, the person, the citizen. They already know everything anyway, but they can pretend that they don't know. They can do this thing called discovery, where they ask loads of questions about the past, having already known or knowing all the answers already. But it makes it look good. It's quite convincing that they actually create this scenario where people might believe that they don't actually know what's going on, which is why they're asking all these questions. I'm here to tell you that they already know the answers. Next slide. And how are we going to solve this problem? So I've given you the doom and the gloom in the first part of this webinar. And now we're going to turn a bit of light on. We're going to have some lightness coming into it, because every problem has a solution. As I've said hundreds of times, the bigger the problem, the bigger the solution. And whatever problem they create, there's always going to be a solution. That's how the universe works. Problems are actually an opportunity to invite the solution to come into your world. Now, a lot of people, when they get a problem and they don't know how to solve it, they stick their head in the sand, they run away from it, they pretend it's not happening. It's human nature, it's fear, because they can't figure out how to solve the problem. So they go into hibernation and they just pretend it's not happening. Well, the problem with that is that the problem gets bigger, and it gets bigger and it gets bigger. And I think everybody here on this webinar and those that will watch it later will probably have an experience sometime in their life where there's a problem that they didn't really want to face. And rather than face it head on, they wanted to just sort of stick it away somewhere and hope that it went away, or hope that some solution would come along from somewhere that would solve it, but they didn't really want to think too much about it. That's human nature. I completely understand it. I completely comprehend it. But in my experience, and I've had lots of problems, the only way to deal with problems is to meet them head on. You've got to know what they are. You've got to understand the nature of them. You've got to understand what's causing them. You've got to know your enemy. You've got to look at it from their eyes. So if you're HMRC and you were looking at a landlord's portfolio and your job is to collect taxes, if you looked at it from HMRC's eyes, it probably changes the perspective and the lens of the problem. You've always got to look at problems from the eyes of those that are creating the problem. If you're going to solve it, you've got to know the enemy. This is the art of legal warfare. It's Sun Tzu, art of war. Know the enemy, know what their moves are likely to be, and know why they're doing whatever it is they're doing, know their strengths, know their weaknesses. So in this scenario, if you look at the weaknesses in the whole structure of these companies with these trusts, these SIS solutions, tax avoidance schemes, there are two weaknesses. If you analyze the whole landscape of this, there are two weaknesses that immediately come to mind. The first one is the promoters of the tax avoidance schemes. They are basically negligent because they promoted schemes which under the microscope do not work. So there is a problem for the promoters. There is a problem for the tax barristers who dream these schemes up. When you put them under a technical microscope, they don't work. And if they did work, they would be winning court cases against HMRC. And they're not, because they don't work and they never did work. The second problem is with HMRC. The second Achilles heel of this whole scenario is how HMRC has conducted itself and the very nature, the fundamental nature of something called income, which we're going to come back to in a moment. Next slide. So you see, if you look at the fact that many people will say, well, you know, the tax barristers, the promoters, they're going to say, well, you know, all you got to do if you're in this situation is tell HMRC you made a mistake. You know, you didn't actually know what you were doing. You know, you didn't really rely on our advice. If you're a tax barrister, this is what they might say. Well, you know, don't worry about HMRC. You can just tell them you made a mistake and maybe you'll get away with them looking back in time and taxing the past. Obviously, you can't get away with making a mistake in the future because you already know what the situation is. You already know the landscape. But you could say to HMRC, well, I just made a mistake. And there is a case, the Pitt versus Holt, where, you know, some people have been able to argue that making a mistake was somehow justification, and HMRC might not look back into the past and do all these past assessments. Well, I don't think it works, and I don't think HMRC are going to let it happen. Barristers' chambers like Cotswold, which I did do some research on this, they were promoting this scheme all over the UK. They made a lot of money, and they were very convincing in how they put their paperwork together, and their promoters that they had was very, very convincing. But they don't really have a defense, because you can't just say, oh, it was a mistake. Can I be forgiven, HMRC? I made a mistake. That isn't going to work. Next slide. Challenging HMRC is a very interesting challenge, because I have been doing a lot of research in the last few weeks, and I've published 2 research papers on this very subject. And for those people who are aware of my interactions with Dan Needle, who allegedly is a tax expert, who was the head of taxes at Clifford Chance, a Magic Circle law firm, one of the biggest law firms in the United Kingdom, I challenged Dan Needle to find me the definition of income in the UK tax manual, HMRC tax manual. Now, you would think that someone like Dan Needle, who studied taxes most of his career, who was a Magic Circle, the head of taxes, the head honcho of one of the biggest law firms in the UK, who actually took down the Chancellor of the Exchequer a few years ago, because allegedly the Chancellor, the ex-Chancellor of the Exchequer, didn't disclose some income, and he had to resign as the Chancellor of the Exchequer because he hadn't disclosed some income, and therefore he was arguably evading taxes. Someone like Dan Needle, you would think that they would know what income actually means. It's quite fundamental, yeah? What is income? Now, if you ask the question to any tax barrister, any lawyer that is supposedly an expert in taxes, they might say to you, well, income is a gain. They might say that. And then you say, well, what is a gain? And they say, well, you know, a gain is an income. And then you say, but yeah, but you've told me what an income is a gain and a gain is an income, but you haven't told me what an income is. What is an income? What is it? Can you describe it to me? And they won't be able to do it. And if you go and look in the tax manuals, which I've done, the UK, the USA, the Canadian, the Australian, the New Zealand, I looked in all of them, and every single one of them goes in a circle. It says an income is a gain and a gain is an income. And not one of them defines what an income actually is. So if you think about that for a minute, and I've been thinking about it quite a bit, how can there be any taxes of any kind if there is no definition of income? It's pretty fundamental, yeah? If they can't define it, they can't tax it, yeah? It's quite a fundamental challenge, I think. Now, the reason why there is no definition of income, or by that same metric, there's no definition of gain either, is because there is no money of substance. I'm going to be doing an interview on this in more detail next week with Andy Benson, because it is so fundamental, right? Let's set the scene. I won't give away everything I'll say, because I'm going to say a lot more on the interview. But the living man woman is the supplier of energy onto this monopoly board. Yeah, but I think we've all established that on all of the webinars and all of my research papers. The living man woman is the source of energy. And what they did was they took out a mortgage over the energy of the living men and women. They did that. HJR 192, you've heard me talk about it a lot. It's in all my research papers. The whole monopoly board of all of these artificial entities, including the birth certificate construct that is the player piece on this great big game of monopoly, all of the properties, all of the tax offices, all of the banks, all of the everything are all artificial. They have no substance. For example, if on Monday morning you get the telephone number for HMRC, give it a try. Ring them up and say, I want to talk to HMRC, please. And the operator will say, well, I can put you through to the tax collections department, or I can put you through to the Samaritans department, because they actually, believe it or not, have a Samaritans department, or I can put you through to customer services, because they even have a customer services department at HMRC. And you say, no, I want to talk to HMRC. I've got a problem here. I want to ask them what income is. And the operator will say, well, I can put you through to the customer services department, or the Samaritans department, or the tax collections department, or the enforcement department. Which of those departments would you like me to put you through to? And you say, I want to talk to HMRC about the definition of income. And the operator will say, well, you can't talk to HMRC. It's an entity. It's not it's not a living man or woman, is it? So that's interesting, isn't it? That you've got an entity that is called HMRC that you can't talk to about what its definition of income is, but yet it can tax something which it can't define. Now let's go one step further. The living man woman supplies energy onto the monopoly board through the player piece, which is the birth certificate construct, that is operating as a banker. And we established that on some webinars before, and it's in my research papers, because the birth certificate construct is a person, and a person in the Bills of Exchange Act of 1882 is defined as a banker. So the banker, which is the person, the citizen, the birth certificate construct, the player piece on the monopoly board, is issuing negotiable instruments, promises to pay in the future, based on and backed by the energy of the living man or woman. So let me give you an example. If I said to Sims, hey Sims, I am going to paint your fence, that lovely colour that you've given me, and I'm going to go out there and spend all afternoon painting your fence. And Sims says, yeah, I'd like you to paint my fence, Ian. You're not bad at painting. So here's all the materials. How much is it going to cost? And I say it's going to cost, because I'm very charitable, it's going to cost £100. And Sims says, yeah, that's really good. You can do that for 100 quid. I'm going to paint your long fence. So we agree, right? So I say it costs £100 and Sims is happy to pay £100. So my labour, I valued it at £100, yeah? And what's it worth to Sims as a living woman? It's worth £100. So is that not a zero-sum game? I say it's worth 100, that's my labour, that's my energy. Sims agrees with me and agrees to give me £100. So 100 less 100 is 0, isn't it? Last time I did some mathematics, if you have 100 and you take 100 away, you come back to 0, don't you? Energy, 0. When you look at the birth certificate construct issuing negotiable instruments, and when you look at the 1099 OID, which we'll look at a little bit in a minute, the value of the original issue discount is 0. So you have to ask the question, if there is no gain on the exchange of energy, which is what we're all doing with our labour and our skill and our talent, how can there be an income for the living man or woman? There can't. And that is why there is no definition of income in any tax manual anywhere in the world. The only way that there could be a profit, let's just call it a profit, is if a corporation gets involved. The corporation, of course, is the birth certificate construct. So the taxes that only apply to the birth certificate construct can only be levied if there is a profit for the corporation, which is the birth certificate construct itself. There can never be a tax for the living man or woman, because the living man or woman is supplying energy, and the supply of energy is met with the acceptance of energy, and it's always going to be 0. It's an interesting subject, one I'm going to be talking a lot more about on the interview, and I will go into it in more detail. But because there's no definition of income, that is definitely a challenge that could be mounted to HMRC. If Dan Needle is unable to answer the question, which he so far has failed to answer, how is HMRC going to answer it? Especially when you can't talk to them. What they're going to do is they're going to get their legal department to come up with some kind of argument that, oh, it's common practice. Well, everyone knows what income is. It's common practice, right? But it isn't in any law book and it isn't in any tax manual. So it's an interesting challenge that would definitely get HMRC thinking, and it might stop them in their tracks for a while. Next slide. So if a tax bill is based on income and there is no definition of income, a challenge to the bill would be to put it back to HMRC and say, well, you know, this tax that you say is due seems to be based on an income, but I can't find what income means. So please tell me what it means. If you can tell me what it means, and don't tell me it means gain, because I also want you to tell me what gain means, I think it might stall them for quite a long time. It would be an interesting thing to do, and we're going to do it. Next slide. So you see, it's all because of the bankruptcy of the whole Monopoly Board in 1933. Everything on the Monopoly Board is what is operating in Chapter 11 bankruptcy. Everything. Every tax office, every government, every company, every person, every single entity that is on that Monopoly Board is operating in Chapter 11 bankruptcy. So I have another question, which again will be asked to HMRC, is how is it possible to make a profit if everything on the Monopoly Board is bankrupt? If every entity on the Monopoly Board is a debtor entity, the person is a debtor entity, that's the birth certificate construct. HMRC is a debtor entity. The mortgage companies that provided the mortgages are debtor entities. The land registry is a debtor entity. How, if everything is a debtor, can there ever be a profit if there is no money of substance? How does that work? If you can't make a gain, a profit, an income, because everything is bankrupt, how can there be a tax? It's an interesting question, isn't it? I put it in my research papers. A lot of people read it. So I think it stimulated a bit of interest. And it's definitely a strategy that could slow them down and stall them for a long time. And it might be a landmark case that they'd have to come up with a definition, which they can't do because it's not in any law book and it's not in any tax manual. So it would really give them a problem. Next slide. But of course, the ultimate solution to this problem, I mean, you can use the art of legal warfare to go after the tax promoters and the designers of these these deficient tax avoidance schemes. You can go after HMRC using the art of legal warfare and challenge them on the art of legal warfare. And that will slow it right down, right? It will slow it down. It will put it in the long grass for a long, long time. And whilst you're doing that, you can do what's the peaceful solution. You can start to, if you're not already doing it, you can start to recoup the signature energy, it's the taxes on the signature energy that created the mortgages that were used to acquire the properties in the first place. So I want you all to imagine, how many landlords are there out there in the UK? How many mortgages do you think that there are? If you added them all together, all the mortgages for every landlord, I think we're talking about a very, very high number, yeah? If you then multiplied the number of mortgages by the face value of the mortgages, yeah, so take the number of mortgages, multiply it by how much was borrowed by the landlords to acquire these properties, that probably runs into a high number of billions, if not trillions. All of that came into existence, sprung into existence through the transference of energy. The living man, woman that signed the mortgage contract to buy or to acquire the property, the equitable title of the property at least, had to sign something to create the mortgage credit. And when they signed the mortgage credit agreement, they transferred their energy from the living man, woman through the birth certificate construct, this artificial person, the player piece on the Monopoly board. And the bank said, thank you for that deposit, because that's what they did. They deposited the energy through the birth certificate construct, which is a banker. We established that, Bills of Exchange Act 1882. And then the bank that's going to provide the mortgage took that in, that promise to pay in the future, that signature, and they showed it on their balance sheet as an asset. And then on the other side of their balance sheet, so they showed the mortgage signature as the asset, and they matched it with a liability on the other side of their balance sheet. This asset goes away, is abandoned. This debt is the mortgage that you see in the mortgage account. So the mortgage provider will say, yeah, your mortgage is ready. You'll see the balance in your account. That debt sprung into existence because the signature deposited energy with the bank. That's the deposit. That's the mortgage. Two sides of a balance sheet. What then happened was the mortgage itself was securitized. The bank, the clearing bank that created that transaction and created the mortgage through the signature, they then sold the mortgage debt, this debt, which has got an interest attached to it, because you've got to pay interest, remember? You know, the landlord's got to pay the bank interest. They sold that mortgage to the investment banks under a securitization. And the investment banks, who are not in the UK, not in Canada, Australia, New Zealand, they're in New York. They're in the United States. And those guys, who I call the gods of the universe, facetious, you know, with a bit of a tongue in cheek when I say it, because I've met many of them, they then buy and sell those debts that they package up into securitizations. And what do they do every year with the United States Treasury, the IRS? They have to pay taxes on those securities, those mortgage securities. They pay taxes, and they pay them, and they actually disguise how they pay them, because they create what's called omnibus accounts. So they create these accounts and they pay taxes under these omnibus accounts to the United States Treasury. And the payment of those taxes is for the use of the landlord's energy. So you've got the landlord who signed a mortgage contract. The mortgage contract, the clearing bank created, there's the asset, there's the liability. The clearing bank then sold the debt, everything's debt-based, remember, to the investment bank. The investment bank starts trading the mortgage as a security with lots of other securities in a bundle. They call it a bond. And then every year, the investment bank has to pay taxes for the use of the energy, the use of the signature. Well, who does that energy really belong to? Does it not belong to the living man or woman that is the agent for the birth certificate construct? The birth certificate construct is the alleged borrower in this mortgage. Doesn't the energy really belong to the living man or woman who is the agent for the birth certificate construct? Of course, the answer to that question is absolutely yes. The energy does belong to the living man or woman who transferred the energy onto the monopoly board through the player piece, which is the birth certificate construct, that then acquired a property that was registered to the cabal through the land registry. So they get the legal title. The landlord, as the birth certificate construct, gets the equitable title, but the energy that created the mortgage still belongs to the living man or woman. It always is going to belong to the living man or woman. The investment bank can't say that they are the creditor. They can presume to be the creditor, but they didn't create the energy, did they? The living man woman created the energy that financed this whole mortgage in the first place. The investment banks can't make a lawful claim that they are the creditor, they are the creator of the energy. They just presume that they are until the record is set straight. We'll come to that in a minute. So you see, if you want to recoup the signature energy, the taxes that are paid on the signature energy, you have to put a structure in place so that you can lawfully claim back the taxes that the investment bank is paying on that signature energy. And there is a way of doing it, which I'll explain in a moment. A lawful way of doing it, the only way to do it, in fact, that is lawful. Next slide. And the lawful way of doing it is detailed in the IRS publication 1212. I'm just looking at the time, because when we did this before, we're actually off today. When we did this before, we actually had 1212 on the clock. It's just when I got to the IRS publication 1212. So it didn't happen today. Maybe it only ever happens once. Publication 1212 is one of the most important documents that anybody could ever read. And I literally mean that. If you only ever read one thing in all of my teachings, is you should read IRS publication 1212. It's an interesting number, 1212, isn't it? It's a very interesting number. I'm sure means something. If you're into angel numbers, I'm pretty sure that means something. Yeah, 1212. So in that document from the United States Treasury, which has been around for a long time, by the way, it talks about the holder in due course. So you might be thinking, well, what does that mean? The holder in due course is the true owner of the energy. In the law, he who creates, and I'm not being sexist, that's what the law says, he who creates is the owner. The creator is the owner. So who does that energy belong to? The living man or woman, yeah? They put the energy on the monopoly board. They did it through a signature. The birth certificate construct can't sign a bit of paper, can it? Can you imagine that? Go and get the birth certificate out of your drawer and ask it to sign a bit of paper. It's not going to happen, is it? But the living man and woman can sign as the agent for the birth certificate construct. The signature is the transaction that transfers the energy onto the monopoly board through the birth certificate construct. The signature can only come from the living man or woman who is the owner of that energy, the creator, the owner. That's what holder in due course means. But here's a problem, right? How does the living man or woman make a reclaim or a recoupment claim of the taxes that are being paid on that energy by the investment bank in New York to the United States Treasury? How does the living man woman do that? How does the living man woman get on to the monopoly board, this artificial monopoly board? How do you get on that board? Can you step on it? Can you jump on it? Can you lie down on it? No, it's artificial. It's like a hologram. So all you can do is to put another piece on the monopoly board. You've got the birth certificate construct. That's a player piece that goes on the monopoly board. You didn't actually put it on the board. Your mum and dad did by registering the birth certificate right at the beginning. They put that player piece on the monopoly board. So if you want to recoup the signature credit, the taxes on the signature credit, and you want to do it through IRS publication 1212, and you want to do it through the original issue discount, which, by the way, the signature that went on the monopoly board at its outset was worth zero. For the same reason that the energy that I might use to paint Sims's fence is ultimately it's zero, because it's worth 100 and I'm going to use 100 of my energy and 𝐮𝐸𝐬𝐧 is going to pay 100 for it. So it's 0. That's why the original issue discount is valued at its outset at 0. Very, very revealing. Next slide. So you see, when you then look at what does the IRS do with all of this information that they've got available to them, right? Remember what I said about the land registry, the HMRC, they know everything, right? So does the US Department of Treasury. They know where all these securities are. They know what taxes the investment banks are paying for using your energy. They know it all. They've got it all in their algorithmic system. So when the IRS is looking at how much taxes the investment banks that are holding your energy are paying tax, they know it all. And they have an algorithm which they use to determine how much taxes is being paid on everyone's energy that's put that energy on the monopoly board through securitization. That algorithm is called the 810 algorithm. And it will look at the clearing bank that you did the mortgage with. It will look at the investment bank who purchased the security, who's holding the security. It will look at the taxes that the investment bank is paying for the use of the energy. It will look at the tax module, which is referencing this type of transaction, this type of tax transaction, which is the 945 tax module. It will know all of that, just like HMRC knows about all the properties and all the rents and everything else and all the mortgages. It knows everything. So you see, if you want to recoup the signature energy, you need to make sure that all of that information and the 1099 OID recoupment isn't going to fail the 810 algorithm, because the IRS's algorithm is going to soon wheedle out any recoupment that doesn't comply with what they already know. And they know everything, by the way. Next slide. So you see, let's go back to what you can do here, right? So we've established that there's two acts of legal warfare that can be employed. There's a challenge on the promoters of the tax avoidance scheme. There is a challenge at HMRC about the definition of income and what's called candor. It's all about how they conducted themselves. Did they act with honor and integrity in all their information that they gave out? That's the challenge on HMRC. The challenge against the against the promoters of the tax schemes, the tax avoidance schemes, is that they were negligent in their advice, right? And now you've got a challenge against the indentured trustee. So, okay, so who is that, you might be thinking? Remember that the mortgage, the clearing bank that created the mortgage, sold it to an investment bank in New York. That investment bank is holding all the mortgages, the securities, in what is called a trust. The trust is governed by something called the Indentured Trustee Act of 1939. So the trustee has to comply with the Indentured Trustee Act of 1939 if they're going to operate lawfully. Now, the trustee, this indentured trustee, is holding your signature energy in a trust. And they are making a trust return every year where they claim that this energy actually belongs to the trust. Well, it doesn't. We established a little while ago that that signature credit does not belong to the indentured trustee, to the investment bank. It belongs to the living man woman. But the living man woman has never made a claim against it because they can't get on the monopoly board, remember? You can't step on the monopoly board and make that claim. So the indentured trustee gets away with it year after year after year by making a claim that they are the creditor, they are the owner of the energy, and they are paying taxes to use that energy because they own it. but they don't own it. So if you do something called an adverse claim, which is you set up a 98 series grantor trust, that's a new player piece on the monopoly board, and the trust files a 1099 OID where the investment bank is paying taxes on the use of the energy from the living man woman. Now the 98 series grantor trust becomes the holder in due course. The trust has now put a superior claim in to the ownership of the energy. The trust, a 98 series grantor trust, has a beneficiary who is the living man or the woman. And the trust is there to protect the interests of the beneficiary, which is the living man or woman. So the trust, which is an international grantor trust, files 1099 OID, which under IRS publication 1212 corrects the record. Now the trust, the 98 series grantor trust, is the holder in due course, is the true creditor of the energy. And the taxes that are due, that are being paid at the moment to the United States Treasury, to the IRS by the investment bank, all of those taxes now belong to the grantor trust, because the grantor trust can lawfully take up its position as the holder in due course, 100% lawfully under IRS publication 1212. And if the same trust, 98 series grantor trust, issues an adverse claim against the investment bank trustee, that's the indentured trustee, that says, prove that you are the creditor of this security, of this mortgage, they can't prove it, because the 98 series grantor trust filed the 1099 OID, which corrects the record at the IRS. It corrects the ledger. So now the indentured trustee that has been claiming that it is the creditor, I hope you understood what this means. It means the mortgage itself, the clearing bank that still claims that there's a mortgage, that mortgage has been discharged. Because at the very top of the ledger, where the indentured trustee is operating, they can no longer claim that they're the creditor. And if they're not the creditor, if the grantor trust is now the creditor, where does that leave the clearing bank? Where does it leave the clearing bank that the actual mortgage is no longer, nobody can lawfully claim that there was a mortgage and a creditor, because the creditor is now the 98 series grantor trust, who's representing the true owner of the energy, the living man or woman. It makes the whole mortgage, it collapses the whole mortgage. Because if there is no lawful creditor that is linked to the clearing bank, the guys who claim that they provided the mortgage, they didn't really, they just did an accounting exercise to create that mortgage in the first place. It defeats and it should eliminate their claim that they have a mortgage charge, because they can't have a mortgage charge because they sold the security to the investment bank who unlawfully claimed it was theirs when it never was. It was always belonging. The energy was always belonging to the living man or woman. And under the Indentured Trustee Act of 1939, it would be a felony for a trustee in the United States to lie about the fact that they are the creditor of that mortgage. They would go to jail in the United States system. It would be a felony, because it is easy to prove that they are not the creditor because of the 1099 OID filing and because of the adverse claim against them as an indentured trustee. And let's suppose that there was a court case going on in the United Kingdom where the mortgage provider has gone into a court somewhere in the United Kingdom and taken up a claim to try and foreclose on the property. The case in New York, which is against the indentured trustee, would be superior to any claim in the United Kingdom. And there would be what's called an international comity. The New York court is superior to the UK court because the New York court is looking at the real party in interest, which is the investment bank indentured trustee, because they have claimed that they are the actual creditor. The case in the UK, if there was a case, would have to be stalled, what they call stayed, until the decision in the New York case was handed down. So if the landlord was going through mortgage foreclosure, for example, that mortgage foreclosure in the UK would have to be stalled until the New York case is decided. There is a comity, international comity, which would stop and slow down the UK court. It should do if they're following the law. There might be cases where it doesn't slow it down if the UK court operates unlawfully and railroads the case. But if they follow the law, it should stop and stall any case for mortgage foreclosure in the United Kingdom. Next slide. So how would you set this up? Well, the first thing you need to do is you need to become an envoy of the Republic of Old Souls. And that is going to elevate the standing of the landlord. The landlord, as a living man or woman, can now operate lawfully as the general executor of the birth certificate construct. Remember, it is an artificial entity. It is not real. You can't talk to it. You can't take the birth certificate entity out for dinner. It is an artificial construct. It is a trust. And every trust has to have an executor, because a trust is like an estate, and it is a dead estate. It is a decedent estate. It can't be alive because you can't talk to it, right? You can't take it for dinner. It has to be dead. It's like everything on the Monopoly board. It's dead. It's artificial. It has no life. So what you do is you become an envoy of the Republic of Old Souls as a living man, woman. And that envoy then occupies the office of the general executor, which sits above the birth certificate construct. And it gives the general executor office an element of control over the birth certificate construct. It doesn't give it ultimate control, because the birth certificate construct is registered to the cabal, registered to the crown, the state. But it does give it a great deal more control. And as an envoy of the Republic of Old Souls, being a ministry, the envoy then has ministry status. Minister status, I should say, as an envoy, and church ministry status elevates right up in the system. On the Monopoly Board of Commerce, being an envoy for a ministry elevates the standing right up. Next slide. And then what you would do, in addition to the tax filing 1099 OID trust, that grantor trust, that's going to file the 1099 OID, which is going to recoup the abandoned taxes, the taxes on that security, which is going to stop the indentured trustee from claiming that they are the creditor, because the 98 series grantor trust number 1, is the true creditor, is the holder in due course. You then set up a second international grantor trust, which is called the Asset Fortress Protocol. The Asset Fortress Protocol would be able to hold, for example, the equitable title to all of the properties that the landlord has. So let's walk you through this, right? There is a challenge against the promoter. That is the barristers and the promoters, the art of legal warfare. They are negligent. There is a challenge against HMRC. What is the definition of income? Did they operate with honour and integrity when they rolled out these different legislations? It slows them right down. Whilst that is going on, a 98 series grantor trust is created that files 1099 OID for every single mortgage in the landlord's portfolio. That then changes the holder in due course to the 98 series grantor trust that's filing the 1099 OID. Then an adverse claim is sent into the indentured trustee for every single mortgage in the landlord's portfolio. Then you've got the actual recoupment of the signature energy, which should happen between 6 and 9 months after the initial grantor trust was created. So all of the face value of the mortgages can be recouped. And all of those recoupments of the signature energy, which is taxes, can be stored in the Asset Fortress Protocol. So take an example. If a landlord had 10 houses, 10 properties with 10 mortgages, and there was 10 million of mortgages, just imagine there was 10 million of mortgages. The value of the properties might be 15 million, might be 8 million, doesn't matter what the value is. They go into this program, they stall HMRC because they're going to take up the art of legal warfare against HMRC. They might win damages against the promoters of the tax avoidance scheme, but they're definitely going to stall HMRC in what they're doing. They then set the grantor trust up, which is going to file the 1099 OIDs for each of those 10 mortgages. They serve an adverse claim in New York against the indentured trustee. That is going to transfer the true creditor position to the 98 series grantor trust that's filing the 1099 OID. It could win in New York and compensation could be paid out in the New York court to the grantor trust because there's been a misrepresentation for years about the true ownership of the credit. It's never been the indentured trustee. It's always been the living man woman who's the beneficiary of this court case in New York. Then there is the recoupment of the signature energy that comes into the grantor trust through the Clifford Protocol, which is the signature energy recoupment. Now the landlord is sitting there with a trust with $10 million sitting in it. He can use that, she can use that to discharge all of the mortgages. Now the portfolio has no debt. All the mortgages are gone. There's no longer a tax problem. Why? Because all of the properties, the equitable title of the properties, can be transferred to the Asset Fortress Protocol. And the Asset Fortress Protocol operates in an international jurisdiction. It is a nation in its own right. It doesn't have to pay tax on any revenue it might receive. It doesn't even have to disclose the revenue that it receives. So all of that property rent that's coming in, that was coming into the company, this tax avoidance scheme, which is in the UK, it couldn't be more ridiculous that they actually set them up in the UK, is now going to an international grantor trust, which is an independent nation that doesn't pay tax. So all that revenue that's coming in is now sheltered, yeah? The mortgages are gone. The recoupments have come in. There might be a win against the promoter of the defective tax scheme, and there might be a win in New York against the indentured trustee. And the Asset Fortress Protocol then operates as the private treasury for the landlord. And everything that is spent out of the Asset Fortress Protocol can be recouped because it's all signature energy that goes out and comes back. Spend, recoup, spend, recoup. All that revenue that comes in from the properties that gets spent from the Asset Fortress Protocol can then be recouped as signature credit recoupment in years to come, year in, year out. Next slide. So the properties become unencumbered. The debt is discharged, lawfully discharged. And the whole revenue that's coming in is tax exempt revenue. The landlord is an envoy of the Republic of 𝐻MRC has a superior jurisdiction. There's no more problem with HMRC, because even if there was a tax problem, it could be discharged by the recoupment of the signature credit. And even if the Asset Fortress Protocol paid the tax to HMRC, it could recoup that tax payment, because the payment of the tax to HMRC is signature credit creation and can be recouped. So the landlord can win on every single aspect of this and shelter all of that future problem by transferring the equitable title of the properties into the Asset Fortress Protocol. Next slide. Spending and recouping, it's a game changer, yeah? Not only has this structure solved the problem of tax, solved the problem of the mortgages, solved the problem of the landlord maybe having to sell all the property and make a massive gain and then having to pay huge capital gains tax on the portfolio. They don't have to do any of those things. They can just remove the problem by the art of legal warfare, stall, and then remove the problem by discharging all the debt through the recoupment of the signature energy, and then transferring the entire portfolio, the equitable title, into the Asset Fortress Protocol, which is a tax-exempt trust. And then they can spend out of the Asset Fortress Protocol and recoup it back. Spend out of the Asset Fortress and recoup it back. Complete transformation. Next slide. So the portfolio, no matter how big or small it is, it might be one property, it might be 100 properties, could be 1,000. Doesn't matter how many there are. Should end up unencumbered with no mortgage debt. That's got to be a win in itself, right? Then you've got the potential of damages claims against the promoters and against the, you're unlikely to get damages from HMRC, but you can store them. Damage claim against the barristers, they've got insurance, by the way, deep insurance policies, very large insurance policies barristers have. And then you've got a potential claim which could win against the indentured trustee in New York. Then you've got the recoupment of the mortgage credit. You've got the discharge of the mortgages. You've got the potential discharge of any taxes. And then you've sheltered the rental revenue in the tax-exempt trust. And then the trust spends and recoups and spends and recoups. Even if I say so myself, I think that is a big turnaround. Next slide.
I couldn't put it better myself, what you just said. Massive turnaround for landlords. And I know there's a lot of people who are joining this presentation for the very first time. So I'm sure they got so much out of today's presentation. And of course, don't forget this, although it's a live presentation, it is being recorded and it will be on the platform in the next few days, along with those additional handouts that I mentioned at the beginning of this presentation to complement today's presentation. But as you know, Ian, a lot of our attendees also submitted some questions, and here we were looking through the top questions. And well, shall we crack on and start with question number 1? Are you ready? Cool. Okay. What specific technical change introduced by Section 24 of the Finance Act 2015, in particular number 2, is cited as the primary cause of effective insolvency for professional property portfolios?
Well, it's really an attack on sole trader. That's what it was really all about. You see the sole trader with hundreds of properties. You know, we sort of stepped outside in HMRC's view, not my view, in their view, looking at it from their viewpoint. They didn't like a sole trader, that's the birth certificate construct, to have a business of this type. They didn't like it. They set it up to fail, well, to win for them and fail for the landlord. and all they had to do was change one piece of legislation. And now, who's going to argue with them when they roll out a piece of new legislation? Who's going to stop them? There's nobody to stop them. They can do pretty much what they like. Yeah. So they already knew what they were going to do many, many years before. As I said,
Hi, Ian.
Yeah.
Hi, Ian. Can you hear me okay? Yeah, can you hear me? Because I'm struggling to hear you. You seem to be cutting out. Right, okay. Bear with us at the moment. As you know, this is live. These things do tend to happen. So give us a moment. I'm sure Ian will come back to answer the rest of the questions. So as I said, I hope you have enjoyed today's presentation. After today's webinar, I will be sending an email out. So if you do have any additional questions after today's presentation, then of course, Ian, along with Andy Benson, who heads up Ross Media, will be doing an additional section. So just bear with us a moment. I think someone's coming through. Hello.
Yeah, well, he obviously didn't like me talking about this.
This is when you need 12-12 quickly.
Yeah, I must be over the target. It threw me out. So.
Oh dear, yeah. So I was just looking because I'm thinking, no, my internet seems okay. So what's going on here? So I think
my internet's fine. It's the platform. It just threw me out. So it froze,
God, how rude!
And it threw me out. So that's interesting. That's never happened before.
Never. That's never happened. I don't know if you want to repeat your answer again, just so we make sure we got the full answer, because you're getting right into it, and then after that, you sounded like you were underwater.
Yeah, as I said at the beginning of this webinar, HMRC knew what they were doing many, many years ago. All they had to do was attack sole traders that had many, many properties and say that was unreasonable. They brought Section 24 in, and then suddenly the sole trader, which is the birth certificate construct, has now got a massive problem. Gross income, tax on gross income, here's that word again, income, gross revenue, tax on that. And then they knew that the landlords would have great difficulty solving the problem. They already knew that, and that's why they brought in Section 24. It was really an attack on the sole trader, but they set the sole trader up in the first place by making it so that the sole trader, landlord, could have multiple properties and multiple mortgages in a business sense. And they didn't like it. If everyone had set up a limited company from the outset and got the mortgages in the name of the limited company from the outset, it would have been all right. But who did that?
Yeah.
Not very many people did that.
No, not at all. Not at all. Thank you for answering question 1. So let's go to question 2, structural vulnerabilities. Now, in HMRC's challenge of substantial incorporation structures, also known as SIS, why is the revocation clause within a trust deed considered a fatal flaw that prevents meeting Section 162 TCGA 1992 relief criteria? I tell you what, these questions are right tongue twisters today.
Yeah, well, they get you thinking, don't they? Well, let's talk about revocation, right? So in every single trust deed that the SIS promoters, the tax barristers put together, they put in, because they had to, otherwise the landlords wouldn't have done it, a revocation clause in the trust, which meant that the landlord could take back the value from the portfolio of properties at any time, because the landlord didn't want the company to own all the equity and all the benefit of the portfolio. They wanted to have what's called beneficial rights over it, right? Well, as soon as the barristers drafted the trust documents up and enabled the landlord to have this beneficial interest still in the trust with a revocation clause, the HMRC said, well, we just look straight through the trust. The landlord still got the mortgages. That's the name of the birth certificate construct. And the company in the trust, we just look through that as if it's not there. Because the revocation clause says that the landlord at any time can take back the portfolio. So it's just like a sham. And that's what HMRC call it. And it's all because of the revocation clause.
Okay, thank you for that. Question number 3, the definitional challenge. How does the art of legal warfare utilise the absence of the black letter statutory definition for the term income in the UK tax code dispute the validity of tax assessments?
Well, when you get an investigation, and that's what happens in this situation, HMRC, they start writing very aggressive letters. They want disclosures. They want all kinds of information. They already know it, by the way, but they want you to confirm it all so that you kind of trip yourself up and fall down their trap. You've walked into their spider's web and they're now going to come and get you. So they want to know, basically, what's your proposal to pay all the taxes? That's really what they want you to say. Yeah, okay, fine. You've got me. I'll come up with the taxes. Well, you can't come up with the taxes unless you sell all the properties, probably. And if you sell all the properties, then you might have a bigger problem, because then you've got all the capital gains tax to pay. So it's a really big problem, right? Now, in the art of legal warfare, if you know your enemy, you have to know your enemy. Well, one of their substantial weaknesses is that they cannot define income. So in a in a lawsuit against HMRC, or even if it's just letters that go back to HMRC, you ask them to define income. They're taxing you on income. You want to know what it is. They won't be able to tell you. They'll just come up with all sorts of language that is circular. And then you say, well, if you can't define what it is, how can I pay it, tax on it, if you can't tell me what it is? It will probably slow it down for a long, long time, right? It will stall the situation with HMRC for a very, very long time. And then if they go to court, because they do that, they do, take up court cases, then you can have the argument, this art of legal warfare in a courtroom. And if it gets into a courtroom, that will also take a long time. So what you're doing with this strategy is buying time, really, because actually what you really want to be doing is recouping the signature credit on all of those mortgages, because that's where the real big remedy is the recoupment of the signature credit on all the mortgages. So you're just stalling the enemy. You're stalling them. You're not letting them into your, not letting them into your environment. You're stalling them. You're keeping them at the gates, and you're using the art of legal warfare to do it.
Thank you for that. Number 4, credit origination theory. According to the currency creation protocol, what is the legal significance of the living individual signature on a mortgage agreement under the Bills of Exchange Act 1882?
So we've got a number of names for signature credit. We have a currency creation protocol. We have an infinite money protocol. We have the Clifford protocol. They all basically are the same thing. It is signature credit recoupment, and it all springs into existence because the birth certificate construct is the banker. If you go and read the Bills of Exchange Act, it'll tell you in there that the birth certificate is a person. It doesn't actually use those words, but it's what it means. The artificial entity of the birth certificate is a person. The person is artificial and it is a banker. And if you read the words in the right way, that's what the Bills of Exchange actually says. Although it doesn't say it clearly in clear English like that. You have to interpret things. And because it's a banker, it's issuing negotiable instruments, which are deposits. So everything you do with the bank is the birth certificate entity is making a deposit of signature energy, whether that's bank payments, whether it's mortgages, credit cards, loans, whether it is the taxes that have been deducted from wages. It's all signature credit energy. And it goes up to the investment banks. They trade it. They pay tax on the use of the energy. The taxes go to United States Treasury. Those taxes belong to the owner of the credit, the creator of the credit, which is always the living man, woman. You recoup it through two 98 series grantor trusts. The first one files tax returns, that's 1099 OID return, against the payer, which is the investment bank that's paying the taxes for the use of the credit, the energy, and you set up another one which will receive the recouped signature energy and spend it and then recoup it, spend it and recoup it. So you've got a 1099 OID to file the tax returns, and you've got a grantor trust that files 1099 OIDs, and then you've got a second grantor trust, which is the private treasury, which receives the benefits of the recoupment and spends and recoups and is used to discharge the mortgages.
Perfect. Thank you so much. Now, question number 5. Bypassing automated holds. Why does the Clifford Protocol mandate filing via a 98 series international grantor trust rather than an individual social security number, also known as SSN, to avoid IRS refund freeze, which is technically also known as TC810 holds?
Well, as I've outlined on some interviews recently, if the birth certificate construct files a 1099 OID, where the birth certificate construct is the debtor entity, it has no entitlement to recoup signature credit or taxes back from the United States Treasury. People get around it, people like Simon Goldberg, by filing on paper. And they think that, that they've got round the system by filing 1099 OIDs on paper. And the IRS system, that's the 810 algorithm, doesn't check the paper filings because it can't, because it's not part of the algorithmic system. And every now and again, a check gets sent out. But that check is not due, it's not lawful, it's RICO fraud. And anybody who's doing that, which I explained on last weekend's webinar, anybody who's involved in the debtor entity, the birth certificate construct, filing 1099 OID, is committing a felony crime because it's not entitled to the recoupment. It's RICO fraud and wire fraud. It's very serious. People have gone to jail for it. Maybe Simon Goldberg will go to jail for it as well, because I believe that Dan Needle has potentially blown the whistle on him to the IRS. So you don't want to be doing it like that. The only lawful way that I know how to do this is to set up a grantor trust, which is a tax-exempt foreign alien entity to the United States system. It files 1099 OID as the holder in due course of the credit. That is perfectly lawful. It's not a debtor entity, it's a creditor entity. So now the creditor entity is entitled to the tax rebate or recoupment from the United States Treasury. There's no laws being broken. It's perfectly in line with the IRS publication 1212. It's perfectly in line with House Joint Resolution 192, which was the bankruptcy of the United States in 1933. And the IRS 810 algorithm will look at it, won't find any issues with it, and it should sail through the system without any holds from the 810 freeze, because everything about it has been checked out all the way from A through Z, which is how we got last year 600 million of confirmed IRS recoupments, because the 810 algorithm didn't freeze those wages and tax transcripts. That's why we had 600 million last year.
Absolutely correct. Now, you just mentioned about a webinar that we did last week, and I know you've mentioned some other webinars in this presentation, and people probably thinking, oh, where are these webinars? Recordings I can watch? Well, they are on the platform right now. So if you go onto your member platform, on the left-hand side menu, you see on demand, click that and you see some other titles. One will say podcast and the other one will say webinar library, and all those recordings are there. So I just wanted to add that in, just in case someone goes, oh, yeah, where can I find that webinar?
Just to add to that, they'll also be available on a dedicated webinar website very soon. It's in construction right now. So all of my webinars on every subject will be available in an open source, via an open source website by country. You'll be able to watch them. You'll be able to watch the preview, the actual webinar. You'll be able to watch the Q&A. And then when the avatar is built, you'll be able to join a session with me as an avatar and ask any question that you've got in relation to that particular webinar where I'm talking about problem and solution.
Correct. That is true. Question number 6. Administrative command. What is the specific function of a manual fiduciary command under Revenue Procedure 2002-26? And how does it satisfy the IRS algorithm 810 matching requirement?
Well, we've obviously had somebody very technically minded write these questions, so they've obviously been paying attention and reading.
They're a little bit tongue twisters here, first thing in the morning. need my coffee.
So if you read my recent research paper where I'm talking about will signature credit bankrupt the United States Treasury, it's a paper I published about 3 weeks ago. You can find it on Telegram. You can find it at Ecclesia Law Institute in the research papers underneath recoupment. In that paper, I talk about the taxes that the investment banks are paying. And there in the 2025 year, there was something like 60 billion of taxes paid by the investment banks. That is not all being paid on the 945 tax module. So the investment banks don't pay everything under the signature credit tax module. They pay taxes under other tax modules. But let's suppose that we've got 1,000 members who are trying to recoup $1 billion, right, from Morgan Stanley. Not from Morgan Stanley, because Morgan Stanley's already paid the taxes to the United States Treasury. Morgan Stanley, let's just say that they paid $10 billion in taxes to the United States Treasury. By the way, they paid a lot more than that. Now, we've got members who have got a grantor trust with recoupment claims of 1 billion, and Morgan Stanley have paid 10 billion in taxes. Yeah, clear so far? Right. Let's suppose that the taxes that Morgan Stanley have paid, they've paid 500,000 on the 945 module. And they've paid 9,500,000 on other tax modules. And we've got a claim of $1 billion for all of our grantor trusts, yeah? So we're trying to claim back $1 billion, and Morgan Stanley have paid 500,000 on their, 500 million, I should say, on their 945 module. So there's not enough, yeah? On the 945 module. But overall, they've paid 10 billion, and our claim is 1 billion. That's when I say our claim, that is the grantor trust. Add them all together, collectively, they've got a 1 billion claim. So what you do is the trustee, who is operating as an officer of the grantor trust, the holder in due course, can command the IRS to move taxes from Morgan Stanley's already paid taxes onto, from other modules, onto the 945 tax module, so that there's enough taxes in the 945 or under the 945 module to meet the claim of all these grantor trusts of $1 billion. That is Revenue Procedure 2002 to 26. That is what it means. The grantor trust has the legal and lawful right to command the United States Treasury, the IRS, to move taxes onto the 945 tax module. Why? Because the 945 tax module is the superior tax module out of all the other tax modules that the investment banks are paying taxes against. It's quite revealing that it is the superior module as confirmed in this Revenue Procedure 2002 to 26.
Okay, thank you so much. And I say last question because we do have some other questions, but the last question on this slide, capacity and jurisdictional standing. So within the Envoy protocol, what is the operational difference between the capacity of default citizen, liable surety, and that of a general executor for the registered legal estate?
Well, when you make a declaration that you are living, breathing man, woman, and you are occupying the office of the general executor over the birth certificate as a decedent estate, you make a declaration. It doesn't go in a database somewhere where the government says, oh yeah, there's another one there. Let's make that guy, let's give him a red carpet when he comes to London. They're not going to do that. If anybody out there thinks that you're going to be treated any differently by the cabal, you're not. But a declaration of standing is a very significant event. It is like a declaration of war. Allegedly go back to the Second World War. The United Kingdom declared war on Germany because Germany didn't do something, right? They invaded Poland. They didn't get out of Poland, according to the history books. A declaration is a very, very powerful thing. It is a wish. It's like a wish. It's like a spell. It's like in Harry Potter waving the wand. It's like a spell. All of these things are energy based, right? So when you make a declaration that you are going to occupy the office of the general executor of the over the birth certificate construct, that changes the whole energy of the construction of this whole Envoy protocol, right? Now, it doesn't mean that you can walk around and do anything you want and you're an envoy of the Republic of Old Souls. You can do anything you want and they can never prosecute you. It does not mean that. A lot of people think that once they become an envoy, they're immune from any damages. They can do anything they want. That is not the case. It's a standing. Now, when you set up a grantor trust and the living man woman is the beneficiary of the trust, the living man woman is the beneficiary and the grantor is the birth certificate construct, it creates absolute clarity that when the grantor trust files a tax return, the 1099 OID, the true beneficiary of that credit is the living man woman as cleared up and as declared by the Envoy protocol filing. It's clarity. It's organizing. It's called split title. You've got the legal title of the birth certificate construct, and then you've got the beneficiary title of the living man woman. And you can't really define those unless you make a declaration. It's a bit like saying to HMRC, if I can explain it like this, can you tell me what the definition of income is? And they say, well, it means gain. And you say, what's gain? They say it's income. There's no definition. Well, in the Envoy protocol, there is a definition of a living man woman. It's making it clear. It's a declaration of standing. It doesn't go in a database somewhere in London or somewhere in New York or somewhere in some other capital of the world, and then they change everything, and then when you drive down the road everyone knows that you're an envoy. It doesn't work like that. It's a declaration. It's a clarity. It's a standing. It is actually what a creditor should be doing, is making declarations.
Lovely. Well, Ian, thank you so much for answering those questions. As I mentioned, I've got some other questions, but what we're doing, I'm mindful of your time and, of course, our attendees today. So we'll probably answer that in a further on, because we do have a Q&A slide as well. So I'll get to those questions in a moment, but we'll just continue on to the next slide. And well, actually, one of the questions we did have, a number of people asking, was with regards to costs. So this is an opportunity if anyone wants to have a consultation, a one-to-one.
Let me step in there, if you don't mind, Sue. Let me step in here, because one of the reasons why I do these webinars is to gauge the level of interest from our membership. Okay, so we don't build everything and then roll it out before we know that the membership has got some interest in the solution itself. That's fundamental, right?
Yeah.
So I need to know from our members whether they are interested in this entire solution. That is the art of legal warfare against the promoters, against HMRC, whether they're interested in the signature credit recoupment part of it, the asset fortress part of it. We've already got signature credit recoupment, that is already available. We've already got asset fortress, that is available. We've already got envoy protocol, that is, all of those are available. What we don't have today is the ability to assist members with the art of legal warfare against HMRC, against the promoters. I need to know from the members whether you're interested in us developing that as a facilitated, not an advisory service. We're not doing legal advice. We're not doing claims management. We're not doing debt counselling. We're not doing any of those things. I need to know from the members whether you want us to develop a process where you will be in charge of it. You will run it with our assistance, as you would be appointing your trust, your grantor trust, will be appointing 𝐻MRC law as your attorney in fact, to provide you with the assistance and the technical knowledge, not legal advice, for you to run cases against HMRC and against the promoters, with all of the assistance and guidance from 𝐻MRC law in the background. In exactly the same way, if you don't mind me saying, as we are looking to do the same with mortgage foreclosure. We are looking for people that are interested in the mortgage foreclosure protocol to do the same thing with that. If the membership is interested in what I have presented, then we will facilitate that part of this process. But I have to say, and I want to be very, very clear, that what I have just described there will only be delivered and developed if there is sufficient interest from those that have attended this webinar, from the envoys, from the advocates. We need to see the demand for this. If there's no demand for it, we're not going to put all of this in place. It's a huge amount of work to develop it all if there's not sufficient interest. If there is sufficient interest, we can get it organized quite quickly. We have the resources to do it. I have all the know-how. 𝐻MRC law can provide all of the infrastructure for it. And what I think will make a massive difference to anybody who is interested in this, the avatar that I mentioned early on in this webinar, the Ian avatar, will be able to provide the questions and answers in relation to the art of legal warfare, in relation to HMRC, in relation to the art of legal warfare against the promoters. It will be the missing piece of the jigsaw, because what happens is members come and they ask our consultants, oh, you know, I don't really understand all parts of this A to Z. Can you do it all for me? That's what they say, right? Now, we can assist, we can be facilitators, we can offer all the background facilitation, but we can't actually do it for you. You have to do it relying on the infrastructure that we build. If you have Ian as an avatar that you can ask any question to it, and if you have an attorney-in-fact relationship where you can get documents and research done under the attorney-in-fact mandate, now you can do it. You can do it for yourself with all the assistance from us. And if that's attractive and you want to do it, or you know people that want to do it, we will build it all out. Absolutely. If you just want to do signature credit recoupment, set up the Envoy protocol, set up the Asset Fortress protocol, and do signature credit recoupment on the mortgages, that's all available right now today. We don't have to build anything. We're already doing it, and we've already had success doing it. So that's what you can book today if you book a consultation. But if you book a consultation with one of our consultants and start asking them, how do you take up a lawsuit against the promoters or the HMRC, they can't provide that to you. We need to build that bit.
And you're absolutely right, Ian. There's a lot of work that is done behind the scenes to put these things together. So would I be right in saying, correct me if I'm wrong, so as I mentioned, all the attendees today will receive an email from me with a link, for one, for additional questions, and two, for their feedback. So maybe if this is in demand, if they just put, say, landlord protocol, how's that? Very simple, landlord protocol, then that will give us an idea. So anyone who fills that out.
We have all the resources to do this, guys. We don't have to go and find out anything. We've got all the resources. We've got project managers. We've got the ability to build this. We've already built something very similar for something else we're doing. We're only going to build things by demand, for demand. When there's demand, we'll build them, and then we'll roll them out. But if there's not enough demand, we'll build something where there is demand. That's basically how it works.
Perfect.
But say it again, because I know sometimes people get confused. You can today do mortgage security recoupment. You can today do Envoy protocol. You can today do Asset Fortress protocol. You just can't do the art of legal warfare stuff today in relation to this. But it wouldn't take long for us to develop it at all.
Correct. I will be sending, so what you just mentioned, what we can do, and if they want that one-to-one, I will send them this link so they can have that one-to-one consultation, what you just described right there. Okay.
Very good.
These are the links I was mentioning at the beginning, if you want to go through these. Yeah,
so you've got the Great Escape protocols, which includes signature credit, it includes, the Clifford protocol, the infinite money, it's basically all the same thing. You've got Asset Fortress, you've got Envoy protocol, you've got all the other protocols. There's videos, there's guides. It's all on that link tree at the very, very top. Then you've got the videos, you've got the interviews that are all on the ROS Media. And soon you'll have the avatar. As soon as we can build it, we started building it. I'm pushing it hard because I think there's going to be a lot of demand for it. Then you'll have access to that, and you can get it to present you the answers to your questions on any subject that I've ever presented in the last year. Say, you will be able to get the answer from an avatar, possibly on your phone, definitely on your computer, possibly on your phone, through an app on the phone, because it may well be possible for us to deliver it. So wherever you are, you'd be able to answer a question to the Ian Clifford avatar, and should be able to give you a presentation on your phone. If we can pull that off, I think that would be awesome. But definitely on the computer.
It is pretty exciting, isn't it? Handouts.
So these will be coming out, and they're also available on Ecclesia Law. So Ecclesia Law Institute, you've got all these handouts, but they'll also be coming out individually as documents, but they're also all available on the Ecclesia Law Institute, where all my research papers are, where all the protocols are. And if you want interviews, me talking about them, that's on the ROS Media platform, where Andy Benson is asking me questions about all of these protocols. They're all there. If you want to watch individual protocol interviews, and there will be the Q&A, which I'm sure there'll be lots of questions following this webinar. I will do that interview with Andy in the next 2 to 3 days, probably Tuesday or Wednesday of next week. That will go live. That will also go out on our social media channels. It'll also be on ROS Media. And I literally answer every single question that comes in.
Perfect.
And we're looking, always seeking to expand. We've got an objective, which is to get 500,000 envoys of the Republic of Old Souls. Why are we doing that? Because we're building a sovereign nation. That is the driving force of the objective for what we're doing. We're building our own nation with its own independent infrastructure, with sovereign status, to be recognized as a sovereign nation going forward, so that you can have diplomatic passports, you can operate with complete independence from the system: energy, water, food, health, communications, even our own currency. It's all been planned. It's all very viable. I've talked about it in the past. We're probably going to do a dedicated webinar on it, because I think a lot of people are interested in it, to refresh everyone on how we're going to build all this stuff, how it's financed. I've produced documents on this. They're on the Telegram channel if you are interested, but I will be doing a webinar on this soon. But in order to get us to that position, we need you to get the word out. We need you to spread the word. And the easiest way to spread the word with advocates is to give them access to, give the people you know access to my webinars. You will be able to give access to the Ian avatar going forward when that's available. And all we want you to do is get this information in front of people that can benefit from it. And if they want to then proceed, fantastic. You are going to earn a passive income stream because they've come in as a result of your referral. And all you've got to do is give them access to the webinar link, which is dedicated and linked to you. That's the easiest thing to do, is give them access to the webinar link. We will be setting this up so that you can promote it through social media channels. And we're actually working on automating that so that you don't even have to do anything. You can become an advocate and you have all of our social media and marketing automatically channeled through your social media channels. We're also working on that because I think that's going to make it so much easier. People that come in through your advocacy, you get recognized for that. You earn the passive income stream because it's basically they've come in and they've enrolled into our programs because you are the source of the referral. It's as simple as that. The passive income is very attractive. If you want to move the slide on to that one, Sims. Yeah. You've got a very attractive passive income stream. It's the best multi-level. It's not even multi-level marketing. There's only 2 levels. If you compare it to a franchise, if you compare it to any of the other sort of programs out there, this is not only is this helping people to navigate on the Monopoly Board of Commerce and bring them relief to the control system, but you can earn a very large passive income stream. And we're making it so easy for you to engage in this. You literally will just have to sign up to be an envoy. You'll have access to all the automated marketing. If you've got social media channels, it will promote our marketing content through your social media. You can give people an individual link, which they can use to join webinars, come into the platform, enroll. It's going to make it it's so easy. And if you think of it like this, if you had 100 people that were envoys of the Republic of Old Souls, and they were all spending and recouping their credit every year, just imagine how much passive income you would be able to receive every single year over 5 years, 1.25 million. That's 100 members. Is that really that difficult to get 100 people if you're using social media to enroll in our programs? I don't think so. I really don't think it's that.
Not at all. And we've got a lot of advocates who are already got over 100 members who've proceeding with those protocols. One of the things you were saying, we do have 2 levels. and we have the advocate originator as well. And what a lot, I speak to a lot of network marketers, affiliate marketers, and what they love is something that you just said, Ian. What we're doing is absolutely phenomenal, and this is what these network marketers absolutely love. A lot of them have been around, they've built networks up, they've informed their network of products or services that they've used in the past. However, those organizations are not around. We've been around for a long time, and we will continue to be around for the next God knows how many years. But here we have, Ian, as you've just said, there's a great passive income. Well, if you are a network marketer and you have affiliate marketers, which we call advocates, then you can just see here, if 5 advocates who just bring in, say, 10 each, you can see what your income will be in 5 years. Well, now let's have a look, continue at the bottom, what the potential earnings are. I mean, Ian, do you want to add to this?
I don't want to go into a lot of detail. I mean, to me, the concept is very easy to understand, right? So all you have to do is introduce people, and we make it really, really easy to introduce people. The whole objective of this is not to everyone to get rich. It's not about getting rich. It's about freedom. But you can have a passive income stream, and we can get to the sovereign nation status with all of our own infrastructure. Along the way, I've never met anybody who doesn't want a passive income. I literally have never met anybody who would say to me, if I ask them a question, do you want passive income? And you don't have to do very much to get it. I have never met anybody who says, no, I don't want it.
No.
That's what you can get here. You can get it. It's very easy. You can go through all the detail on your training webinars and all the things that you're doing, Sims. The concept is, this is helping people. We're reaching out to and driving towards freedom. Everybody wants freedom who understands the problems, and you can increase and enhance your lifestyle, not only through the recruitment program, the signature credit program for yourself, but you can massively enhance it through the advocacy program.
Yeah, definitely. And funny enough, Ian, I had a question that came through, which we'll go on to the next slide now, but someone has been referred by an advocate, and they are looking to become advocates themselves, which you can do if you log on to the member platform, and you can see on the left-hand side menu how to become an advocate. But also with advocates as well, there are the webinar reward scheme, if you want to go into details here, Ian.
Yeah, so I mean, at the moment, all of the protocols, the Great Escape protocols, there is a donation to set them up and to enroll into them. And a lot of people are saying, well, I don't have that available to me. I can't make that donation. So if you're in that position and you want to reduce the donation amount, then get involved in promoting the webinar. If you had 100 people coming as a result of your promotion of any of my webinars, that gives you £1,000 off the donation into the enrollment of a protocol. Let's say you had 1,000 people. Now you've got 10,000 that you can set against the the 10,000 reward points. You can set that against the enrollment donation for any protocols that you want to do. So again, we're trying to make it really easy. We'll give you the link. You can promote that through social media. It's all the marketing comes with it. You don't have to create the marketing content. It's all there for you. You just share the link on your social media, share it with your friends, family, your network, find people that could be interested in the subject. If you know other landlords, send them the link, and you'll be able to get these reward points as a result. So that's how I want to spread the word, how I want to grow the network. It's not just in the UK. Remember, we're operating in Canada, in the United States, in New Zealand, in Australia, in parts of the Commonwealth, in parts of Europe. It's not just about the United Kingdom. We've got members in all of those areas, and we can spread the word in all of those areas. Right,
as I mentioned, any additional questions that you have, from today's presentation, I will be sending you a link that will take you to a form. So please add those additional questions. As Ian said, in the next 2 to 3 days, him alongside Andy Benson are going to do an additional Q&A section as well. So we'll answer any of your outstanding questions that you have. And of course, don't forget feedback, especially what Ian's also saying. You know, if there is demand for the landlord protocol, then, you know, there's something they put together. So, but we do need your feedback. So please, you know, submit your questions and let us know if there's something that is of interest. And of course, if you have enjoyed today's webinar, because your feedback is vital and also for us to improve future presentations. However, Ian, if you recall, I did mention there were some questions that were submitted. And as you also mentioned, it's not, you know, we have attendees from the UK, USA, Canada, Australia, New Zealand, other parts of the Commonwealth, and Europe as well. So some of the questions I have received, if that's okay to answer these for you, with regards to landlords, what they're also asking is not just buy-to-lets, HMOs, as you know, they have commercial mortgages, but also short-term lets, the likes of your holiday lets or your Airbnbs. Is this something that one can go through? If they go, yeah, this is something I need, this is my portfolio, because some landlords have different varieties of properties, what they do with them, mixtures of HMOs, buy-to-lets and holiday lets as well.
Yeah, the solution that I've outlined will work in a very similar way, you know, to for any type of portfolio. You know, signature credit, it doesn't matter whether the mortgage is called a commercial mortgage or a HMO or a buy-to-let, or call it whatever you want. It doesn't make any difference to the way it was, the way it sprung into existence. They used your signature to create the mortgage. They sold the mortgage debt. The investment banks are paying taxes on the use of your energy. You're not recouping it at the moment, unless you've already been doing it with us, and you should be. It doesn't matter what the mortgages are called. It makes no difference. It's all about the signature credit. That's the real big remedy here. Setting up trusts to get lawful standing, the envoy protocol, the spend and recoup, all of that stuff. It doesn't matter. It won't make a jot of difference what the mortgage is called, what the portfolio is called. Signature credit is signature credit.
Exactly. And well, I think by saying that, you're going to probably answer the next question, because you know, we're talking about HMRC, which is UK. So we've had a lot of questions saying, okay, I don't live in the UK. I do live in the USA and Canada. Is this something that I can do in my own local countries? And I know there are those who reside outside of the UK, for example, USA, Canada, I give that, or in Europe, who own property outside of their local countries, as well as UK landlords. Because I know UK landlords, not only do they have properties in the UK, especially from a holiday let point of view, but also overseas, for example, Spain.
Yeah, so again, it's the same answer I gave earlier.
Yeah.
If there is demand from the membership, we will build it out. But we're not going to build out a protocol for every country and then find out that there isn't enough demand for it. So if you say that you're interested in your portfolio of properties in Australia, we'll you know, and there's others that want that solution. We'll run a pilot scheme and then we'll roll it out. But no matter what it is,
yeah,
if there's demand for it and we can facilitate it, which there's always a solution for every problem, we will build it. That's what we're doing. That's why we're doing these webinars, so that we can gauge the interest in different problems, solving different problems, and then we'll build it out. So it doesn't matter where the problem is, we will build the solution if there's demand for it.
Brilliant. So it's so important, everyone, when you receive that email from me with that form, please give your feedback, because as Ian said, if there's demand, they will start. So your feedback is vital as well. And I think you have already answered this question, but I will ask this anyway, Ian, because I don't want people thinking I had forgotten their questions. Not at all. I do go through all the questions just before we go live. Someone said about a step-by-step process will enable him and his wife to ring fence their portfolio to enable their children to inherit without the government or the Crown getting their hands on it.
Well, that's one of the reasons why the wealthy have always used trusts, but not statutory trusts, because they're bullshit and don't work. Asset Fortress Protocol is an international grantor trust. It's a nation in its own right. It's tax exempt. You hold all the property in there, and the HMRC can't get their hands on it. No tax office can get their hands on it the way that the trust is being created, because it's not just a bit of paper. A lot of people say, oh, I've got a trust. I say, really? What have you really got is a bit of paper, a trust deed. That's all you've got is a trust document. Yeah, it's just a bit of paper. And they think that they've been protected because they've got a bit of paper that says it's a trust. This is not a bit of paper. This is it's an entity with an EIN number that is established as a foreign alien nation to the United States. Independent, separate, no tax, can hold property, not just a bit of paper, which all these trust gurus or in every country sell, a bit of paper or a stack of paper. It's not that. It's way more sophisticated than that.
Lovely. Thank you for that. And as I said, any additional questions that you have, please fill that detail out so that Andy and Ian can get that answered in the next few days as well. And I'd like to say thank you to everybody who joined this webinar. I hope you got so much out of it, especially, our regulars who like to come on there. I hope, again, it cemented that information. Ian shares so much, and there's going to be a lot more he will be sharing as well, but also to our new attendees. Again, I hope you enjoyed today's session as well. And as I mentioned, I will be sending you a form with a link. So, and your feedback in general, what you've, how much you've enjoyed today, because we want to ensure we consistently improve our presentations week in and week out. And it does actually make a big difference. But don't forget, Ian has said it's all about demand. So if you're interested in this and you think you should go ahead, just say Landlord Protocol. And also what may help is what country do you reside in? So that will give us an indication where the demand is from which country as well. But Ian, before we wrap up and finish, any final thoughts or final words?
Yeah, I'm looking forward to launching the avatar. I think that's going to make a big difference. I'm looking forward to presenting there's a whole series of webinars coming up. Different problems, different solutions. All of them are going to be on a dedicated website where you'll be able to search by country, by problem. You better see the pre-webinar, because I'll do a pre-webinar introduction with Andy Benson. You better see the webinar itself. You'll better see the Q&A, and then you'll be able to just click on a link, open up the avatar, and you can ask it to present to you anything that you're not sure about, and it should know the answers. And it should be a likeness of me presenting whatever the question is that you've got, whatever you want to know about, it should know the answers based upon huge amount of content that we're putting into it from all of my previous webinars, from all of the ecclesial law research papers that I've written, from all of the Q&As that I've done, from every resource that we've created in the last 6 months to a year goes into the avatar's memory. Everything new that I am presenting going forward will go into its memory, and it should just be like having a chat with me about whatever it is you want to ask. I'm hoping for.
I have a feeling it's going to be very popular. I don't know what makes me think, but I think it will. Thanks so much, Ian. And again, thank you for taking the time out in presenting the Landlord Protocol. So those who are watching through StreamYard, Facebook and YouTube, I'd like to say thank you for joining us. Have a wonderful weekend. Take care and goodbye. And for those, thank you. And for those who are on Instagram,